Hey guys, welcome to Indian Stock Tuber channel. This is my first video and this is my first episode. So I'm going to actually briefly talk about why is this channel, and also I'm going to talk about some fundamental uh, stuff of our Indian economy, and also we're going to see is this the right time to invest in Indian market, right? So these are some of the questions you will actually get to know. So before going and deep dive onto the Indian economy, right, we are going to see what are things we are going to cover as part of this channel on a regular basis. This channel's main purpose is to see the fundamental and technical analysis of a specific stock, right? We would actually go through a lot of stock analysis in the following sessions, and we will also see when to buy it and when to sell it. So during the analysis, we will also see the company's history, the fundamental uh, financial stuff of the company, like the balance sheet analysis, the quarterly results analysis, and also some of the key important parameters like asset quality, like shareholding patterns, and so on and so forth. And then we would also see the data analytics of the given stock, and also discuss some of the important events and the trends of the particular stock, right? And then we also actually discuss about how to build the portfolio, right, in the coming session. So today we are going to discuss or see on the bigger picture of our Indian economy, that is in terms of GDP versus our market, and also the historic trends in comparing the GDP and the market. And also we're going to see about the current problems what the economy is facing. And also we would see how our markets are heading towards, and we'd also discuss whether is it the right time to actually invest in the market. So friends, this chart compares our GDP versus our market, and this chart has been taken or compared in a time frame of close to 15 years, that is from 2004 till 2019, and this is almost the latest one, um, as of October November time frame, right? So when you actually see our market was actually grown from 2005 or 2004 till 2008 to 4x times, that is from 1500 to 6000, right? And when you see during that point in time our GDP was actually very stable. It was actually on close to 9 to 9.5 percentage. I would say that's the boom period for our economy, right? After 2008, if you just see, there is a big dip in both the market and the GDP, right? That's due to the global factors where we had the US recession, right? The Lehman Brothers had the problem, US went into recession, right? Our GDP actually dipped from 9.3% to 3.8%, and that also reflected on the market, right? Our market was actually 73% down. It was actually down to 2,800 points. That is from 6,000 points to 2,800 points, right? And from there on, we had a lot of stability in our economy, right? That actually moved the market very quickly in a couple of years, from the GDP, which was at the bottom of 3.8% to 9.3%, right? So which means it was actually back to normal. And from there, right, that is exactly from 2010 till 2019, close to 2019 time frame, our economy was actually, or our GDP was actually trending on an average of 7.3 percentage. So during the same period, that is from 2010 to 2019, where we had inflation volatility from stating from 6.5% to 8%, right? Our market actually was in the growth path. That is, from 2010 to 2019, we had grown 5.5x times. That is, the market has grown from 2,800 points to 12,000, right? Um, so basically, what that means is, right, our market is actually had a decent support when GDP trends at around 7 to 8%, right? Now, when you actually see that is a late 2019, that is starting May June time frame, right? Our GDP number was actually dipped drastically from 7.3% to 5.5%, right? Which is close to 37% down on our GDP numbers. That's mainly due to a lot of factors. Um, One is the NBFC crisis, uh, and we also had the auto crisis, where auto industry had a major slowdown, is actually going through major slowdown. Also, our infrastructure industry is also actually going through a slowdown, right? That actually brought down our GDP number from 7.3% to 5.7 percentage, right? But during the same time frame, that is from June 2019 till September October 2019, right, the market didn't actually correct much. That may be because of a lot of uh, uh, a new announcement came from the government, like cutting on the corporate tax, and then correction on our GST rules, right? Those were actually being made so that our market was being protected, right? But here is the challenge, right? Currently, we also we currently the numbers shows that we have been corrected from our all-time high of 12,000 points, and we are currently on the October mid time frame. We are actually trading at around 11,300 points, which is 6% down from our all-time high, right? So when you just compare our uh, GDP number, which is 37 percentage down from our the last high of 7.3%, right? The market didn't correct that much, right? But if you just go to sometime uh, down to 2008, right, where we had US recession, right, our GDP number went down drastically. That is 83 percentage, where we actually saw an equivalent amount of 73% correction in the market. So this actually tells that our market has not been corrected even if our GDP is actually going in the downtrend, right? But the next question what we have in our mind is, are we actually heading towards the correction? So are we heading towards correction? And the answer is yes. And I have actually collected some of the key metrics to prove that we might land into a correction if our GDP is not going to grow in the subsequent quarters. So here is the stats. So before going into the stats, let's see our Nifty chart. So currently on October as of 11th, 2019, our market ended at 11,300 points, right? And during that point in time, our GDP was actually at 5.5 or 7 percentage, right? Um, so if In the subsequent quarters, that is on the September quarter time frame, if our GDP doesn't improve, that is from 5.7 percentage, close to 6 or 6.5 percentage, then Nifty would technically land into its 2018 support level, which is 10,000 points. So that said, we would actually correct by 18% from the recent closing numbers, which is 11,305. If our GDP is not going to improve before 2020 June quarter, then we would correct to 2017 low, which is 8,200 points, which is 37 percentage low from our all-time high, right? So we need to actually look into these important levels, and also we need to actually closely monitor our GDP numbers going forward. That is on our September timeframe, December, and March and June timeframe of 2020, right? If we actually see some improvements in our GDP growth or GDP number, then probably would actually maintain, the market would actually maintain these numbers, or else then we would actually land into our support zone, which is 8,200 or to 10,000 based upon the GDP number, which we are going to actually see in the coming quarters. So what needs to be done next? Is this the right time to invest? The answer is we need to actually wait, right? We need to wait for the coming quarter GDP numbers, and also we need to wait for some more time for subsequent quarter numbers, GDP numbers, so that we can actually uh, predict some trends, and then we can actually move further on that. So until then, what we are going to do, right? So as a starting point of this channel, right? Um, During this phase, right? What we would actually do is we would actually wait, and then we'd actually analyze more stocks so that we can actually have the right numbers for buy and sell of the stocks, and then we would actually go further in building our portfolio, right? So in the upcoming sessions, what we would actually see is we would see the quality stocks in which are being listed in National Stock Exchange. So currently the numbers as of in National Stock Exchange is 1,650 companies which got listed. So out of which you'd actually select the quality stocks, right? We would actually go over the fundamental analysis and technical analysis of some of the stocks, and then we would actually uh, put the buy and sell numbers for each of the stocks, so that we would actually build a decent portfolio, right? And then we would actually get benefit out of our market, right? uh, so hope this video helps in terms of understanding our current Indian economy and the current problems what our Indian economy is facing, right? Hope our Indian economy um, grooms well during this tough period, right? And we would see a better GDP growth. If not, we would actually be um, uh, we need to actually do a good amount of analysis, right? So that we need to pick some quality stocks so that we should not be losing money, right? So that would be our important goal, right, going forward. Hope this video is helpful, right? Please do subscribe this channel, right? On a week to week basis we'll be actually seeing more stocks analysis, right? And that might actually help our financial needs going forward, right? And also I do recommend the people who watched this video, right? If you want to actually do some stock analysis, right, just put in your comments, right, so that I can actually list down all those stuff, and in the upcoming videos I can actually do all the fundamental and technical analysis of the stocks. Thank you friends, thanks for watching this video, and I am reiterating that please do subscribe this channel. Going forward you will actually see value from this videos. Thank you. Bye.